Hey, Dad, I heard Mom talking about taxes. What are they?
Well, taxes are charges made by the government to pay for its functions, such as the fire department, the police officers, our roads, and even our schools. The power to tax is given to each state by the federal government, and these powers are limited only by the Constitution. Local governments get their power to tax from the state, and these powers are limited only by the state and U.S. constitutions.
But, Dad, taxes don't sound fair.
Well, son, they're not. But there are some laws in place to limit taxes. Taxes cannot be imposed on interstate and foreign commerce. States can also not tax the federal government or its agencies. There's even the 14th Amendment to our Constitution that protects us from taxes further. Due process states that taxes must be imposed and administered fairly. Also, taxes should not be so heavy that they can seize property. And taxes must be imposed for public services only. There's also the Equal Protection Clause, which forbids unreasonable areas of taxation where I cannot tax you simply because you're wearing a yellow shirt.
Hi, I'd like to buy this box of Kleenex and this bunch of bananas, please.
Perfect. They're $1 a piece, so that'll be $2.06.
$2.06? If they're $1 a piece, why is it $2.06?
Well, you see, you have to pay a 6% sales tax.
Okay, so if there's two of them, why isn't it $2.12?
Well, you see, you don't have to pay a sales tax on food goods, like your bunch of bananas.
Well, I was just at Burger King yesterday and they charged me sales tax. How come?
Well, you also pay a sales tax on services people provide, like cooking the food for you.
I guess I gotta go get myself some more money.
Yes, and on top of that, if you were buying a good such as alcohol or tobacco, you would have to pay an additional selective sales tax on this, as opposed to the general sales tax you're paying on your box of Kleenex.
I'll be back. Hey, it's really bugging me. Why does the government charge sales tax?
Well, there are two main reasons. One is that it's a dependable revenue producer, because people are going to need to continue to buy goods. Also, it's very easy to collect, because if you can't produce the tax at the time of purchase, you're not allowed to have your item. It's also a regressive tax, which means that it has a flat rate, so no matter how much money you earn, you pay the same 6%. That's why it falls heavier on lower income people than it does on higher income individuals.
Hey boss, I just got my first paycheck and there's all these deductions in there. What is that about?
Oh, well, that's probably your income tax.
Income tax? What is that?
It's a tax levied on individuals or corporations on their incomes. Well, okay, so there are a few different places that income tax goes to. There's your federal income tax, your state income tax, and then because you work in the city of Detroit, there's also a city income tax.
Oh, that's a lot of tax. Is that the same thing as the sales tax when I'm buying goods?
No, a sales tax is a regressive tax. Income tax is progressive, which means you have a higher tax rate the higher your income is.
Oh, that sure is a lot of tax. So they take taxes out of my check and then they take taxes when I buy stuff.
That's correct.
Wow.
But income tax is the major source of income for our federal government.
Alright.
I'm so glad I just opened up my first tax advisory firm. Ooh, my first customers. Come in.
Hello.
Hi. What can I do for you today?
Well, we just got married and we're thinking about buying a house, and my mom insists that besides just thinking about how much the house costs, that we need to think about property tax.
Well, that's true. On top of your mortgage and the down payment, you're going to have a property tax, which is a tax levied on land, buildings, and improvements to your land.
Well, how do we know how much property tax we need to pay?
Well, calculating property tax is actually pretty easy. First, you need an assessor to come to your house and make an assessment. This is when he gives a value to your property. This value that he gives is called the true cash value of your home and property. Now let's say for an example, your home and property are worth $240,000. In Michigan, you're only taxed on half that. So this $120,000 is your state equalized value, or the taxable value of your house. Now, you pay mills. Mills are $1 in tax for every $1,000 of property worth. So you would need to divide your state equalized value by 1,000, or simply cross out the last 3 zeros, then multiply by the number of mills. Let's use 10 mills for example. So you'll have a yearly $1,200 in property tax.
Well, that's a lot of money. How are we supposed to afford that?
Well, you can also pay this with monthly installments. So you simply divide the annual amount by 12 and get your monthly rate.
Well, that certainly seems more affordable.
Well, thank you very much for your help.
Oh, no problem. But that'll be $106 for my services.
Well, not this again.